In Forex trading, there are exactly 2 indicators that are a must-know for a professional and successful trader. If you master these 2, you have the tools to become long-term profitable. In this video, you will learn which ones that are and, of course, how to use them and what you have to do to prevent yourself from doing the same mistakes as 99% of all trading beginners do. So what do we want in order for a successful trend trading? Of course, what we want is a clean trend. Like we see here, the market is doing new higher highs and higher lows. The market has already done a few waves here. Of course, we don't know for sure if the market continues. We never know in trading. What we do, we use our advantages. So this setup gives us the advantage that we know from experience in trend trading. We usually see 3 to 5 waves within a trending direction. So there's a high potential that this will happen here as well. So what we want to do is to catch the trade after the pullback to get the most of the movement and then enter here into a long position so we catch the further movements for a good and profitable trade. So this is what high potential setups are. We use our advantage that we can analyze in the chart. And to help traders to do this analysis and make it, of course, more precise, there are tools like indicators that we use to do this analysis. And that's what we will talk about in this video. If you have trouble detecting those movements in the market in order to find your advantage, then click below this video and join my group. There you will definitely learn how to identify them and to use them for your analysis. Let's continue with that what most traders do wrong because they have FOMO. The fear of missing out, they fear that they miss out the big movements that we described here. So they want to get in the market as early as possible so they don't miss out this chance. But please guys, please be patient. Wait for the situation where the setup is fulfilled, where the setup is confirmed, so you enter the good chances only. Always remember that these pullbacks here, they don't usually happen like this. They don't happen straight. They happen in waves as well, sometimes even like this. So sometimes the traders think, okay, here we have a breakout. So I will enter the market right here. For example, in this situation, we have a beautiful downwards movement. So doesn't this look really nice for a good and high potential trade? In the first view, of course, it does. We have lower lows, we have lower highs, and here we also have a good pullback. So let's enter a short position here. With the next candle, we want to enter the market. Stop loss above here. And then let's see what the market does. Continues first, then has a spike down into the downwards direction, but the market doesn't manage to go through. And then the market goes a little sideways and then turns, bam, and your stop loss gets hit here. And the trade ends with a loss. So what's the problem here? This is maybe the direction of the movement. This is the whole movement that I have drawn here. The pullback is going all its way down. So this, in this case, is a fake breakout that you are trading. And the market then later on continues its way into the short direction before it later on changes into the direction that you want. This is a possible situation. And in this case, it also shows us that only looking at the 50 minutes chart where you want to place your trade is dangerous because you don't see the overall situation here. You don't really know what is happening in this situation. You can't tell if this movement is a trending movement or just a pullback, a correction of the ongoing movement. So what you see is the timing is essential. And for us to not enter the market blindly, to find a good timing, we will take a look at a higher time frame. If you want to place a trade on M15 like we want here, I would recommend to go as high as the hourly chart at least. Higher is better sometimes, so we will pick the 4-hour chart. Here on the 4-hour chart, we get a totally different picture than on M15. We are not in a downwards movement. Of course, the market came from one like here, but then we see the market has broken through this last resistance and then making a new higher high. So drawing this movement. So we see the market is making a new high, this low, and then we see we have exactly the movement that I've drawn in on M15. So we have already 2 waves, and then we have this pullback here that we want to find an entry within. But what can we do in order to be sure that this is probably the end of the pullback? For that, first we analyze the support and resistance area that is relevant in this area, and we see we have run right here where the market has reacted to quite a lot. So it's a strong support and resistance area that the market is running into. And please don't take this line as exact as possible. It is always more of an area than really an exact line. So that's the first thing. We really have to know where there is the strong level where the market will probably react to again. And then the second step, really important, we use one of these 2 important indicators, the Fibonacci retracement. We apply it to the chart from the last low to the last high and then stretch it out into the area that the market is going to reach. And we see the market is within the key level of support and resistance, and also we see with the Fibonacci retracement that the market has reached the 50% level. So what the Fibonacci retracement is telling us, in strong trends, the pullback usually ends between the 38.2 and the 50% line, and then the market returns to its ongoing trend direction. In slower trends, the market often reaches an area between 50% and 62% as well before it continues back into the long direction. So to prevent ourselves from FOMO, the fear of missing out the trades, of course, we want to catch the long runners, that's for sure, but we want to catch only the high potential trades. And if we catch those, we make sure we catch the long runners as well, and that we have a profitable long-term working strategy. So what we need to prevent ourselves from this FOMO is, of course, we need to know how a correction looks like. The first indication is here. We see that there's more momentum in the upwards direction here. Then in the correction, we see there's more small candles, wicks in both directions like here. So the market is going more slowly into this area. And in the ongoing trending movements, when it's making new highs, then we have more momentum in the market. You see big green candles with long bodies. So this is how a correction should look like. Of course, we have this trending movements, accumulation, distribution, accumulation, distribution. We have this area where the market has reached the key level of support and resistance. If you don't know how to analyze them properly, look onto my YouTube channel. I have special videos just on that for you to learn how to analyze key levels of support and resistance for your trading. And then last but not least, we have the Fibonacci retracement that confirms that this is the area where the market will probably soon continue its way into the long trading direction again. But always make sure that you use the Fibonacci retracement in the right situation. What we want is not quantity, what we do is quality. We only want to trade the high potential setups. So we need green light, like from the traffic lights first, which we get here through this upwards trend that is starting the key level and the Fibonacci retracement. This is bright green light for us in order to enter this market into the long direction soon. But there's another indicator that we use to make sure that this will work, that we will use for confirmation before we really enter the market. And this indicator we will talk in the next video next week. So stay tuned. It will be an awesome video. Those two indicators will together boost your trend trading strategy in the Forex market. So make sure to come back to this channel next week to watch video number 2. And if you don't want to wait until then, you find below this video the link to my website where you find all contacts from me and how to learn trading with me. That's it for today for this video. I will see you next week in video number 2. Bye bye.